Hey, what's up guys? So welcome back to the channel, and today we're going to be talking about 3 stocks that I would buy during this stock market crash, during the whole pandemic. And I wanted to give a quick shout out to Tyler Stanley for giving the idea in the comments down below. So we're going to be talking about 3 stocks for you, big guy, and what we should buy during this whole crash. So the first stock that we're going to be buying during this crash is Disney. So everyone knows Disney. They make a bunch of movies. They have a lot of different services. So they have their streaming services. They have obviously the Disney parks. And for a lot of people that don't know, they also have cruise lines. And the entertainment industry has been one of the industries that has been hit the most during this whole pandemic. Disney is down about 40% since their highs that were around $142. Now they're at around $100. And you know, during this whole quarantine, a lot of people are buying new Disney Plus subscriptions because they're stuck in their house. So a lot of parents are getting Disney Plus for their kids that are stuck at home and just want to watch any Disney kind of movie throughout the day and the week. To add to that, Disney also has a 1.75% dividend yield. So what a dividend yield is, I know a lot of you guys don't know what a dividend yield is because you're brand new to the channel. So what it is basically a company that shares its profits every quarter. So every 3 months, a company will share its profits with their shareholders. And because you're buying their stock, you're actually a part owner of that company, which is pretty cool, right? So let's say you buy Disney, you buy Microsoft, you're technically a part owner in that company, and every 3 months they'll give you a certain percentage of their profits. So in Disney's case, it's about 1.7% dividend yield. So let's say you own 10 stocks of Disney, you'll get 1.75% every 3 months just for owning that stock, which is pretty cool. And if that stock goes up, you're making that almost 2% a year plus whatever the stock went up during that year. So I think it's pretty cool that they do that. The next 2 stocks that we're going to be talking about don't have a dividend yield. I didn't want to do a dividend yield video. We're going to probably save that for another time. It's smart to get dividend stocks, especially during this whole pandemic. But the next one that we'll be going with is called Delta Airlines. And the reason why I went or started looking at Delta Airlines during this whole pandemic is because I saw Warren Buffett buy it, and his cost basis was about $46 per share. And right now the stock is trading around $30. So I got pretty intrigued. I told myself, if Warren Buffett could get a stock for $46, or his average cost is $46, and it's at $30 right now, why not take a look into it and see what they have to offer? Is it at a good price right now? Did he make a good purchase? So the whole entertainment industry has been hit during this pandemic, and so has the airlines, the casinos, and everything entertainment related. So cruise lines, everything like that has been hit. So Delta Airlines was hit really hard during this market crash, and that's why I decided to take a look into it. The main issue with airlines is that they have a lot of debt because they got to build these airplanes that are millions of dollars. And they also got to rent out the space at the airports, which a lot of people don't know. After they're done building, tens of millions of dollar planes, they also have to rent out the space at different airports to be able to fly from that airport to another. Over the last couple of years, the airline industry has been growing substantially. A lot of people love traveling around the world, and that's not going to stop anytime soon. In my opinion, I think that the industry will just grow even more throughout the years. Now it's a special exception because everyone's staying inside their house, no one is traveling anywhere. That's why these prices have crashed down so much. No one is using airplanes right now or is flying anywhere, going on vacation. But in the long run, I really think that Delta Airlines has a lot of potential. And especially if you could get a price that's cheaper than what one of the richest men in the world got it at, I think that's most of the time a pretty good deal. But be careful right now. We don't know where the bottom of the market is. So, if you're going to buy stocks, don't put all your money in at once. Buy it, and then if it keeps dropping, average cost your prices. So make sure that if it keeps dropping, you buy a bit more. Like that, when it goes back up, you'll have dropped the average price of your stock. The third stock we're going to be looking at today is a bit up in the air. A lot of people have their opinion about this stock, and so do I. So I'll share it with you guys. It's actually Uber. We're going to be looking at Uber. A lot of people have talked about this stock, and it had dropped enormously during this market crash, and no one is really taking Ubers right now. Why would you go in the car if you risk the chance of getting, the virus that's out there? So Uber was around $40 when I was looking at it a couple months ago. It dropped down all the way to $17. And now it's back up to, around $26, $27, which is still a very good price for it. If it drops down a bit less, around the $23, $24 range, I'll probably decide to invest a bit more in it. But everyone knows Uber. They have the biggest market share in car riding business, and they also have a good portion of the delivery food service industry, which is only going to keep growing, I think, throughout the years. Fast food is going to keep growing, and so will delivery services. People getting lazy out there, and a lot of people don't believe in Uber. I'm one of the believers. I think it's going to be a really good stock, but I'm not looking at it for the next year or two, not at all. I'm looking at it more 5-6 years down the line. I think they'll be able to be a major player in the industry. They're also developing their autonomous vehicles. It's not as good as Tesla, I can tell you that, but if they end up partnering up with Tesla, because Tesla is thinking about doing a auto taxi network where there's gonna be no driver in the car, and it'll be able to pick people up around, drop them off at their destination, and you'll also be able to use, let's say you own a Tesla, be able to program your Tesla, so when you're not using it, it drives around, it grabs people, it drops them off places, and it's actually making you some passive income at the same time. So if Uber could partner up with them, I think that could be a massive deal. But even right now, just with their ride sharing business and their food delivery business, I think that they're doing really good for themselves, and it's only going to expand throughout the years. Also, about Uber, they also have a freight business, and what that is basically transportation. So they're taking products, they're bringing them from one place to another. A lot of people don't know that, and it's a really small portion. They're still losing money on it, but I think in the long run, if they expand that, they expand their food delivery service and their ride sharing a bit more, maybe partner up with Tesla, I think they got something going for them over there. And like I said before, be careful with Uber, and don't expect to buy it and then within the next year to be profitable with it. I'm thinking about this stock as in 5 years down the line, see what's going to happen with it. And I think honestly at these prices, it's actually a good price right now. But if it drops even more, man, load up the boat, and I think it has a lot of potential there. I'm also going to give you guys a quick fourth stock that I'm keeping my eye on. I'm not buying right now. I already own some of the stock, and that's going to be Amazon. So Amazon is at around $1,900 right now, and hasn't really dipped since the crash. In 2018, there was a bigger crash on the Amazon stock than there is actually right now with the coronavirus. There's a lot of online shopping that's being done on Amazon right now. And if you went to go check on Amazon right now, there's some delays that are up to a month of delivery. So Amazon, it's an amazing stock, a bit more expensive, but if you could get a couple of shares of it or fractional shares, there's some websites out there that let you just buy portions of the share. I wouldn't buy it right now, but if it drops to around that $1,600 mark, I would think about buying it, just because my cost average is about half of what it is right now. And those were my special 4 stocks, guys. So like, share, and subscribe. It would really mean a lot to me. And if you guys have any questions down below, or what stocks you guys are buying out there or thinking of buying, drop it in the comments down below. It would really mean a lot to me. And I love answering your questions. Shout out to you again, Tyler. This video is made for you. And if you have more questions, put them down below. Ciao, guys, and be safe with your investing. I'm not a financial advisor, but this is what I'm doing. If you guys want to see my portfolio, what I own right now, I'm open to that. Just let me know in the comments. Share, subscribe, it would mean a lot to me. And Tyler, this video was made for you, for commenting in the previous video. So thank you so much for that. And if you have any more questions or stocks that you guys are buying or thinking about buying, just drop it in the comments below. I'd love to make a video about it. I didn't talk a lot about, Facebook. AbbVie is another stock that's out there that a lot of people like. Microsoft as well, a couple stocks that I own, but I haven't talked about them in this video. If you guys want to hear about it or have any questions about anything investing, real estate related, it would make me more than happy to answer them. So ciao, guys, and take care of yourselves out there. Be smart with your investing. And just to give you guys a quick little recap of the stocks we went over today, we went over Disney, which is down about 40%. I think it's a pretty good buy right now, especially for the long term. Second was Delta Airlines, where you're getting the stock cheaper than Warren Buffett got it at. and it's just an industry that's going to be booming over the next couple of years. And third, we went for more of a speculative stock with Uber that I think has a lot of growth potential. And then a quick little bonus for you guys was Amazon. Keep your eye on that one. It's a great stock. I've had it for a while now. It just hasn't dropped enough for me to want to buy some more shares in it. So thank you guys. Like, share, and subscribe again. Any questions you have, drop it in the comments. It would really mean a lot to me. Ciao guys.